Hello and welcome to the Hot Corner Insider Live Strategy Session. Today is Wednesday. We do this every Wednesday at 1 o'clock, where we come on and we talk about, some macro musings and whatever's taken place in the market since last week. And then we dive into our favorite setups in our insider filing universe. A lot to talk about today. I know that we kind of skipped the whatever's taken place in the market since last week intro section of the call last week. So let's dive right in and catch ourselves up. First, nothing that we discuss here today constitutes any solicitation to buy or sell any security. This is all solely for informational purposes and not to be construed as investment advice. The bulls just came back in a big way. November, only half over. It's been a good month. A month for the record books in many ways, which we'll talk about in just a second. But first, let's talk about these structures. Let's start with the leaders. This is the Spider Technology Index, XLK. I know half of it is Microsoft and Apple. And then a big chunk of it is also NVIDIA, right? But this is perfect because I want to look at what the leaders are doing. And what XLK is doing is just so textbook from a bullish chart pattern, bullish price action perspective. Let's walk through it from left to right. We peaked and rolled over late 2021, early 2022, big drawdown. This thing built out a beautiful base that it launched higher off of starting in Q2 of this year. We ran right into significant overhead supply level at these old highs. You got the false start that we've marked here in red, and then the summer correction. But all it really was a textbook cup and handle pattern. Sometimes we call these base on base patterns, right? You got the base and then another base shaping up around the breakout level of the initial base, right? Because you don't want an asset to move in a straight line higher. It's not sustainable. In fact, we were just on our analyst call talking about different strategies for betting against a stock that's been in a parabolic uptrend. You want an orderly uptrend, right? So, we rip higher off the lows from last year, run right into a logical level, spend 3 or 4 months digesting these gains and consolidating at a big level. And now you're seeing buyers come back in a big way for the past, call it 3 weeks, and a breakaway gap, not just above the pivot highs or the year-to-date highs from earlier this summer, but above the all-time highs that were marked back in late 2021, early 2022. So, textbook breakaway gap. This is the way you want a bullish pattern to resolve. We often, when we write or outline long ideas, we use the word decisive. Say we want a decisive breakout, right? We want a decisive resolution from this pattern. It doesn't get much more decisive than a breakaway gap. JC often calls them gap and goes because, and I like that name a lot because a gap and go doesn't retest, right? These are the gaps that are least likely to be filled, the breakaway gaps. They also are the gaps that, from a get long perspective, are most important because they tend to happen in the early stages or the early innings of a new trend. So think about this. Straight sideways, people got pretty bearish during this corrective action that began in June, July, right? Straight sideways, and now all of a sudden, absolutely ripping higher, resolving this, multi-month range that began this summer, but also resolving the larger structural pattern to the upside. So now that's your new line in the sand for XLK right here at these old highs. Semiconductors, same thing. Is there a more important index in the world? I would argue no. There aren't stocks that... There is not a group of stocks where I would get more excited about outperformance in terms of a broader market thesis than semiconductors. When these guys are leading, it's usually a really good sign. We went back and we did the work. Tech stocks tend to lead in every bull market. And semiconductors, at least since people have really understood what semiconductors are, so for a couple decades now, have always been big leaders at the top, of our industry group list for every bull market. And we're seeing it again. They're kicking off what I believe is a new leg higher. I think you're going to see institutions and smart money chase these leaders into year end. It is pretty normal thing that we see and hear about on Wall Street. It's called window dressing. So if you're a fund manager or hedge fund or an institution and you have to send quarterly statements to your clients, December 31st, you're going to be holding NVIDIA, you're going to be holding Broadcom, you're going to be holding Microsoft, you're going to hold all those leaders because you want to send your statements to your clients and say, hey, look, we're in the best stocks. Right. And then your client might say, oh, well, they underperformed a little bit this year, but at least, we're in NVIDIA, we're in Microsoft, right? It's a thing. So I think that leadership will be totally chased, and we're seeing it. We're seeing it just off the pivot lows or the correction lows from late last month, right? The best stocks have been the leaders from earlier in the year: semiconductors, home builders. Home builders just erupted off of their pivot lows from a few weeks ago. We're going to talk more about this one a little bit. We got a home builder later on in the call that we'll get to, but a massive gap and go. Sure, not gapping the new all-time highs, but gapping above those late 2021, early 2022 highs. This is ITB. And I think, after semiconductors, from a pro-cyclical, bullish economy, bullish broader market standpoint, there aren't many groups that I want to see doing well more than semis and home builders. So that's the leaders. How about the laggards? If it's going to be a sustained bull run, right, that lasts into next year, and we're going to have plenty of long opportunities, in the coming quarters, we need to see an expansion in participation. And we need to see a healthy broadening of this rally. What I mean by that is, while I think, focusing too much on Magnificent Seven and mega cap tech has been misleading, they have been the best stocks, right? While it hasn't been just 7 stocks, it has been a historically thin bull market, right? So if it's going to be sustainable, I think you have to get buy-in from small caps, mid caps, micro caps, speculative tech, things like biotech, new issues, these IPO indexes. You want to see those groups start to work. Really, we want to see the laggards get off the floor and start participating in a much bigger way. ARK falls into that laggard category. This is our barometer for speculative tech, non-profitable tech, right? Called a number of different things. These are the longest duration equities, right? Where we're pricing in cash flows 10, 15 years out in some of these cases, right? So ARK, not just holding these lows, key lows, prior cycle lows, as you can see back in 2018, back at the COVID lows, and then, pivot lows from this year and last year. Best week ever for ARK. That was just 2 weeks ago. Bodes well. Also, in that same conversation of laggards needing to start participating, the Russell 2000, it just keeps digging in and defending these range lows, right? We've seen it over and over and over and over again. And if we zoom out, this level gets even more important, right? It's where the prior cycle highs are. Not only do we dig in and defend them, but best day since really this time last year. Biggest single day performance in a year. A lot of people say, oh, that's just one day's performance. It's a good way to measure a momentum thrust, right? I love to use the short-term rate of change to tell me if a new initiation phase or a new bull run is coming underway. That's what I'm seeing from small caps right now off of these range lows. Interesting thing about what happened, right? Let's get a little fundamental. Inflation, it's a big deal. Why? Interest rates are a big deal. The market wants to be confident that the Fed is done hiking rates. And for the market to truly believe that the Fed is done hiking rates, we need to see inflation data come in showing that the Fed's been able to tame the inflationary forces at work here. Apparently, they got that answer, or a bit of that answer, just the other day. So this was October CPI day. It happened on November 14th this year. It was November 10th last year. Russell 2000 small cap index just had its best day since the last time October CPI was reported. The market keeps on getting evidence that maybe inflation is cooling off in a big way and the Fed could be done. We saw Fed fund futures move from pricing in like a 15% chance of a rate hike at the next meeting to 0% after this inflation report. We also saw some of the biggest single day moves from a variety of stock market indexes since the last time we got October CPI in November of last year. At the same time, the dollar absolutely collapsed. So when we go back and we look, okay, the dollar had its biggest down day since November 10th of last year, just as the Russell 2000 had its biggest up day. So that dollar weakness or the dollar cooling off, right? The dollar's been in a sweet rally off the July lows, right? Now we kind of coiled, consolidated for a while. Now it looks like we got a pretty decisive breakdown yesterday. And that's what kicked off this massive intraday rally from stocks. We've seen this before. So the dollar tends to experience volatility in both directions at key turning points. This is the one-day rate of change, again, shown in a different way. And this is an old chart. This was the COVID highs from March of 2020. Look at how volatility just blew out in both directions. The dollar peaked and rolled over, ended up being a major tailwind for risk assets and stocks. Then this time last year, September, October of last year, dollar volatility blowing out in both directions. This was the peak. Dollar rolled over, and lower dollars ended up being massive tailwind for risk assets. Showing in a different way now. I can't help but feel deja vu when I look at this chart. So September of last year, this was early September here, where the blue consolidation is first drawn. Consolidated for a little bit less than 2 months, right? And what we would have called a short-term continuation pattern. And it was October CPI day that blew out this little range and confirmed a downside resolution, right? So this was a failed continuation pattern. And this ushered in a great couple of quarters, the best beginning of the year ever for the NASDAQ 100, right? Just a great period for the stock market. And this year, nice ripper off the July lows for the dollar, 2-month consolidation that began in September. Again, you would also call this a short-term continuation pattern, right? Coming off a nice reaction leg higher, taking out some pivot highs from earlier in the year. Looks like we have some sort of a completed reversal pattern here. And then, boom, October CPI day hits yesterday, and this thing just gets blown out lower. Right. So downside resolutions happening on this economic data or this inflation data, 2-month consolidations in both cases, resolving lower. The question I think we should all be asking ourselves is this a downside resolution, just like we had this time last year, that's going to lead to a big down wave in the US dollar, a weaker US dollar that will usher in a period of rising prices for risk assets and stocks? I think so far, so good, right? I think we could be pretty confident in making that bet, right? Getting that volatility blowing out, turning point stuff. I think this is at least a short or intermediate term trend reversal. And dollar now, I think we got to be looking to the lower bounds of this range and asking ourselves, what are stocks doing if the dollar's heading all the way back to these lows from earlier in the year? Spoiler alert, they're probably doing great. All right, so let's talk about something that we want to be buying. Duolingo already hit one price target. Been working for us. You know, some of the most active insider buying since we started doing this list almost 2 years ago now has been in Duolingo. Durable Capital Partners just owns a massive stake now. And boy, have they already done well on it. They probably got a nice like double. I don't know what their cost basis is, but stocks, 3 times where it was at its lows last year? Not bad. 200 is a big level. 205 highs from late 2021. Really the base breakout level here. So let it cool off, let it digest a little bit. Maybe you get a retest. You want to buy as close to 205 as possible. Next target 294. ITT Inc. Timothy Powers, he's a director, buyer last year. And we tend to see this where when we get this bullish insider buying, we put these names on a list and we save them for later. Because a lot of times these executives are coming out and buying weakness. We like to buy strength. So now we got the completed base. Yeah, nice prolonged basing pattern. When you zoom out, this chart looks really good. It's a diversified industrial resolving higher. Again, looks like semiconductors, looks like tech, right? You have this key level here. You got this base and then another base, right? A little cup and handle. And we're gapping above not just the multi-month range here, shown with this green arc, but a much larger pattern. I love this technical action. This stock looks as good as any. Call it 105 or above 105. First target 131. I think we go there and more. Chart looks great. Hilton Worldwide. Just talking to Fonz about like some of these hotel operators. Just they're just great long-term holds, right? You look at a long-term chart of Hilton, Hyatt, Marriott. They all look pretty good. So Hilton, we tried to get long here like a year ago, didn't work, right? We got a little retest back to this COVID breakout level. Nice little consolidation. Now this range is resolving higher. 160 is the level. For above 160, we want to own Hilton with a target of 230. Toll Brothers. All right, so this is the vehicle. I think home builders are in that basket of stocks that get chased in the year end, right? Haven't been many industry groups better than home builders off the lows from last year. Definitely a leadership group. Toll Brothers looks as good as anything. This is a weekly chart. We're at the 161.8. These are the pre-financial crisis highs. Massive crash, right? The housing market crash. Just became the left side of a massive base that finally just went, I guess, earlier this year. First target being hit now, right? Like decade and a half long base. One target's been hit. That's why I'm showing the 261 and the 423 here. We think this thing runs. When you look at the action at the index level, this is home construction ITB, right? We got the gap and go above those 2021 highs, but not quite above the year-to-date highs. If we zoom in on Toll Brothers, we got a breakaway gap 2 weeks ago that took out the 2021 highs. Now we're getting another breakaway gap, and this is not earnings. This is nothing. This is just supply and demand. It's beautiful, right? So it's like a double breakaway gap. We got the breakaway gap above the prior cycle highs. Now a breakaway gap above the range highs. Price action here is just so bullish. So Toll, got to be long. Call it 87. I think you jump it, get in right here, right now. Trading at like 86. First target 132. Second target 206. Not many stocks look better than Toll Brothers. Vertiv Holdings, VRT, director, dropped $1 million buy this time last year. Good for him. Did he pick the bottom? Let's see. VRT purchase was on November 4th, 2022. Maybe he knew October CPI day was coming up. Yeah, not bad. Right, so he's probably in around basically the base breakout level, like 13, 14. He was a buyer up in this vicinity here. So got the base breakout back above those 2021 highs. First target hit 41.50. We think this one continues. Think about it, just like a lot of stocks, sideways since September, August, but with an upward bias, right? We were talking to Doug Bush, who was our guest on the morning show this morning, about how the stocks everybody's talking about now, today, that are breaking back out to new highs, you know, taking out their range highs, whatever it is, stocks everybody wants to be in past few weeks, happen to be the ones that corrected in the most constructive way, or the most resilient way since this summer, right? So while most stocks were falling during the summer, Vertiv was just like slowly grinding higher. That's the way it corrected. Now, obviously, that there, you know, that pressure has come off the broader market. You're seeing these leaders just explode to the upside. So Vertiv is in that group. If we're above 4150, we want to be long with a target of about 6250. Uber Technologies, it's so good. I'm actually thinking about getting out of some of my calls that I have for next year. I own the common too, so I just kind of trade around the calls. And when I look at this one, at least for now, if I hold these calls much longer, I'm just going to feel like I'm being very greedy, right? We got the range resolution. This one has had like one down day in the past 13 sessions, 14 sessions. So like 3 weeks down 1 or 2 days over that period. Explosive resolution. This one's got new all-time highs written all over it. So not thinking about selling my common, but just because of the run that we've had, RSI in the mid to upper 70s this week. Maybe not a bad place to feed the ducks, depending on what your time frame is. But if we do get weakness back towards that 47 level, or I would even use the range highs, which come in around 49.50, 49.50. You want to buy any and all weakness back towards that level. And again, longer term, we think all-time highs and then some for Uber. DraftKings, same thing. The reversal is in. First target's hit. Now we're getting a massive range resolution. And just like we talked about, the best stocks, the ones everybody wants to own today, are the ones that consolidated or corrected in the most resilient manner since the summer. This was the July peak. And then look at what this did. Not a big drawdown, not a big sell-off, not even retesting the, base breakout level around 2150, just straight sideways. And now that pressure is coming off the broader market, exploding higher. So if you didn't get into DraftKings, where we initially entered at this base breakout level around 2150, first target's been hit, little coil right up there called 34.25, and now we're resuming higher. So very actionable, great level to enter on. And our next stop is 49.50. For me, DraftKings, though, if you're patient enough, you have a longer time frame, you think we're in a new bull market, you want new all-time highs from this one. I think a double back to those old all-time highs from early 2021, 74. That's really what you want from DraftKings. CrowdStrike. I think we want to be ready. One of the stronger names out there right now, in one of the best groups. Cybersecurity stocks are red hot. We like Crowd, we like Palo Alto, we like Zscaler. Get ready for 220. If you missed 170, I think 220, a little bit of digestion. Hopefully we get a little flag or a little coil there. Get long against 220, and this one's going back to 300. Coinbase, got to talk about it. Crypto's exciting. The way these cryptocurrencies, whether it's Bitcoin, Ethereum, Solana, have corrected since last week, right? Because it was last Friday. We had a huge run up in the last Friday, and then a little bit of consolidation. Solana's been up like 10% each day the last 2 sessions. They're still working. During this corrective action over the last week, they haven't even moved out of overbought territory. I think as the crypto bull market broadens, Coinbase becomes a more and more attractive way to play it. Why? We have vehicles like MicroStrategy, Riot, Mara, right? The crypto miners. They're not crypto stocks as much as they're Bitcoin stocks, right? MicroStrategy just owns Bitcoin as a leveraged spot Bitcoin ETF. The crypto miners make money off of price appreciation in Bitcoin. They're not crypto plays, they're Bitcoin plays. Earlier this year and late last year, it was just Bitcoin leading the rally, right? Nothing else was participating. Now we're talking about Solana, Avalanche, Atom, right? Cosmos. All these altcoins are starting to join the party. That's the business Coinbase is in. Coinbase doesn't just do well when Bitcoin is doing well, like some of these other crypto equities. Coinbase does well when the whole crypto space is doing well. So I like this one more and more. It's up about 8%, 7% here today. Looks like it's getting ready to hit its highest level since late July. For me, the breakout level was the low 80s. We got involved. We were pounding the table on it earlier this month. I think you get confirmation around 110, these year-to-date highs, 110, 115. But really, we're expecting a lot more from a name like this. So once we get to that 110, 115 level, we'll come out here and start talking about price targets a little bit further out. We'll measure this base out. But really, for me, if this is a new sustained crypto bull run, I'm holding the common in Coinbase. I'm looking back to those all-time highs around 400. So this one's really exciting stock. If you have the patience, you plan on holding it for a while, I think you're going to get a lot out of this if these cryptos keep doing what they're doing right now. One more, Palo Alto Networks, PANW. You know, stocks like this deserve a breather, right? And you're seeing it kind of in a big way today. I don't love the intraday price action. We're engulfing yesterday's candle right at the upper bounds of this range. Might need some time. I wouldn't panic though, right? Because I think you're going to see that from some of these. Nvidia too, doing the same thing out here today. Broadcom, Broadcom's holding up pretty well. But some of these stocks that really just ripped off the lows from late last month, they deserve a breather. They deserve some digestion. If Palo Alto is going to do that here, great. Be patient with it. Buy on strength back above this 260 and change level. You got the pivot highs there. You don't want maybe confirmation at 265. I think you could eventually jump it, maybe use 260. Yeah. So that's the 161.8. Price target comes in about 342. Again, just like we said about CrowdStrike, exciting space, leadership group. We like to buy the strongest stocks in the strongest areas. Palo Alto is one of them, long above 260, target 342. And just real quick, side note, we love big cap tech. That theme of chasing the leaders into year end. If you want to hear more about those leadership stocks, that's really what we focused on last week's call. So go back, watch last week's video. We talk about Broadcom, Nvidia, Microsoft, right? All of the leaders. I still think that is the theme. And that's kind of the playbook you want to lean on into at least into year end, probably into early next year. But again, as the rally broadens, if it will be a sustainable bull market, we want to kind of venture out to other groups, right? Because we would expect to see some catch up and some buy-in from some of the laggards. So we tried to focus on some new setups today. Go watch last week's for all of those leaders that you all know and love so much. Now, let me just check the chat before we get out of here. As you know, you can always reach us, info@allstarcharts.com with your questions, comments, concerns. Want to say hi, give me some food recommendations, whatever it is. YOLO or Wall Street. Hey, man. Okay. Hey, Mary. Daniel, Toll. Yeah, I like it too. Bitcoin popping. What else is new? Love it. Earnings this evening. Wouldn't overthink it. Yes, we are so hot right now. All right, so thank you, chat. I'm going to do a better job at monitoring it on these calls in the future. But as always, thank you, everybody, for joining. Happy Wednesday. We'll be back here, same time, same place next week. Have a good one.